Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, with some comments about tomorrow's Brexit vote. The vote on whether Britain should remain in or leave the EU. Now, I can't overemphasize how important this vote is for the markets. The head of the IMF, Christine Lagarde, last month warned that if Britain votes to leave, the impact would range from pretty bad to very, very bad. Currently, the market expects Remain in the EU side to win. The bookies give Remain about a 75% likelihood. The sterling is almost back to the high for the year, set on January 1st, when Remain had a solid lead in the polls, indicating that most of the Brexit risk is now out of the market. However, the polls aren't so certain. They show the two sides pretty evenly matched. Of course, the polls aren't perfect. In fact, they have a pretty poor track record. In any event, there's still a large proportion of people who are uncertain, a large enough proportion to sway it either way. Nonetheless, the market seems to be discounting Remain. What that means is, if the vote does go that way, the relief rally is likely to be modest. I'd expect to see stocks rally, gold fall, and both sterling and the euro gain, although not that dramatically. British stocks have still outperformed the European continental stock market so far this year, so we can't expect a huge surge of money into the UK. On the other hand, if they vote to leave, there's likely to be chaos. That's not what the market is prepared for, so it would come as a surprise. In the first case, the pound would plunge. The euro would also come under pressure, I expect. Funds would flow out of these currencies and into the dollar, plus the two safe haven currencies, the yen and the Swiss francs. Stock markets globally would fall on general risk aversion trade, while gold would probably get a boost. The initial problem is the uncertainty that Britain leaving the EU would cause. Nobody knows exactly how long it would take to establish a new framework for UK trade, and nobody knows exactly how it would work. And markets hate uncertainty. Even so, the direct economic impact is really the least of the problems. The big problem is the implication for the whole European project, the ever closer union that the EU is pledged to pursue. It really throws the whole EU into question. That's why I think the euro would get hit hard too. The vote has the potential to be the biggest market event of the year. If you've got a position in the markets, you'd better think how it's going to be affected by the vote. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.